All right, welcome back to another update on the dividend portfolio. And today I wanted to talk to you guys about my Tesla option that I have, and I made a decision. So first, let's get into it. Right now I'm down 11:30. The market is almost closed. We have, what, a minute or less. The past week, up 576. 1 month, 68.24. 3 months, 11,137. Year to date, 17,041. 1 year mark, 20,173. And overall, 80% at 29,425. All right, so this is mostly a video on my Tesla call. So if you're new here, I'm using margin to sell options and do the wheel strategy. So sell a put, and then if it gets exercised and I own those shares, sell a call until they get called away. So that's what I've been doing. So we are using $39,000 worth of margin right now. I have a total of 57,000. So you guys can see that that's what I'm using. Actually, options collateral 13,000. That's another option that I used, or option money that I'm using for, I'm sorry, margin money on an option, if that makes sense. So what I noticed, and I have to look into this, but if I'm using margin, which is Robinhood's money, and it's within the option contract and it hasn't exercised yet, that money that I'm using does not incur an interest fee. Only the money that has been used where shares have been purchased, not when I'm waiting for the option to expire. So that time frame, the money does, it does get used from the margin account, but there's no interest on it, which is interesting. So I got to read a little bit about that, why Robinhood does that. So, all right, so let's get into the Tesla. So here it is. First, let's go into the Tesla history and what happened, so you guys can get an idea. And I'm going to tell you why I'm going to do what I'm going to do here. So all right, so down at the bottom there, I sold a put for Tesla at $225. So I made $435. Then towards 10 days later, right here, we exercised at $225. So I did buy 100 shares of Tesla, and that was all using margin money, so it's not my money. Then I started selling calls, because what I'm doing is I take the shares, the wheel strategy, you get assigned, then you turn around and sell calls until they get called away. So I sold a call, and what happened was I sold a couple calls, they expired, nothing happened. And then I sold this big call here, $400 at $227.50. Then the election happened. Tesla's starting to take off. Actually, no, before that it started to take off. It did take off a little bit. So what I did here on the 24th of October, I rolled it. And I rolled it from $227.50 to, what do we roll it here? $232.50. So about $500 more dollars overall. So now I'm sitting at Tesla, this option here. Where is it? Scroll up. There it is. So the option here is worth a lot more now. It's in the $7,938. So because Tesla's price right now is $310. So I could roll it, or I could just let it exercise tomorrow at $232.50 and just let it be. I made a little bit of money. The purchase price was what, $220, $222 or whatever it was. So I made at least $1,000 plus the $800 that I made with the options premium. So almost $2,000 in profit. Yes, I am losing out on the profit here if I could sell for $310, but I can't roll it. So if you guys want to see what's going on, so let's go to the option. So remember, my price is $232.50. If we try to roll it, so it's going to cost $7,900, but I want to match that so I don't lose any money. So we're going to have to go out, even if we go to the end of the month, to match 7,900. Right now, the price is right there. If you guys see the difference between 230 and 235, right in the middle there. So either I go 235 and take a loss of a few $100 and push the amount that I would get at 235 instead of 232. So there's not, and wait a few weeks, or go 230, lose a little bit of money, but gain it on the difference. So really it's not making a difference there if I roll it till November. Okay. The goal is not to hold a lot of shares. If we go out to December 27th, this is the closest one that I saw, or the first one that I saw that could probably make sense, maybe, if the price stays the same of Tesla, 310, and I have to pay $7,900, I could go to 235 right there. You guys see it, 235, 79.40, 79.38 is what I have to pay. I would make 79.40. So break even, push the price up to 235, and that's it, and wait until the end of the year, which is a month and a half away. Now, is that worth it? Now, remember, I'm paying 6% interest on the $22,000. So that's about $3 a day that I'm paying, and I can't use that money to do other options. Now, if we go out even further, let's go March, just to go crazy and see what we have here. We would have to go to we could probably go to 250 and pay a little bit of money, or 245 and make a little bit of money, but that's months and months away. If I have that $20,000, I could start selling other options and do the wheel with that money, and I'm not paying interest. So I think the decision is to let it expire and let the shares get called away. Overall, I did make a couple $1,000s. I am losing out on the 7,900 that it's showing here, but I'm just going to have to take the $2,000 gain, not pay interest, reduce the margin money that I'm using, which is 39 grand. And you guys can see here, I'll show you there at the bottom, I'm using 39,000 and change. So right now the fee annual rate, and it's 6%, daily interest $6.43. So if I cut that in half, I'm thinking the fee, a daily fee, is going to be $3 a day. Now, if we have the extra 20,000, we can start selling puts on other stocks. For example, if we go to like Nvidia. So let's take a look at Nvidia, Tesla. We could even sell on Tesla again. We could use coin. So if we use Nvidia, let's do an option just for 1 week out, which is next week. Sell a put. I mean, look at the prices. If we go to 143 right here, it will cost us margin money about 14,300. We'll make about 485 to 495 for the week. Now this one's a little riskier. We could go maybe 140. Still a little risky. It's not too bad. Make 370 to 375 for the week. If I do it tomorrow, having that money, or do it Monday, this might change. Just depends on the price. So I think it's best to have the money, get rid of the Tesla shares, and reduce the margin account or debt, and then use the money to do other options. So, all right, so that's the decision, guys. I'm just going to let the shares go and get called away tomorrow when the market closes. And lost a little bit of money as potential money, but that's how you do the wheel. You might lose this type of money by getting the shares and selling options, or selling a put or whatever, but just be careful when you do options altogether. But that's going to be the decision. I think we're just going to let the shares go away, get rid of the margin amount that I have, reduce it by 20,000 or 23,000, and then do it again, do other wheel on something else. And that's what we're going to do. All right, guys, I just wanted to give you an update on that. I know a lot of you guys said roll the shares, but I don't think if I roll them, it's just going to stay at the same price. I'm going to have, let's say it rolls over the asking price and then I get to hold those shares. What's going to happen? I don't know. I think I'm going to make more money if I have the money in hand instead of just waiting or keep rolling it and paying the interest and not having the money accessible to me. So, all right, guys, thanks for watching. I will talk to you guys on the next one. Thanks.